If you are in a business or starting a business, it is important to understand that there are five basic functions involved in the business that everyone has to focus on to be profitable. The five functions are marketing, finance, operations, human resources, and technology. These functions can be divided into several sub-functions based on the size of the organization and the nature of the industry. In this presentation, our focus is on finance and in particular, circular function of finance. Let's assume that you are interested in starting a small restaurant. You have done the homework and prepared the business plan. To start a business, you need to raise money. This is the first step in the circular function of finance. Let's label this as raise funds on the circular function of finance and assume that you have raised $500,000 by selling stocks to start the restaurant. After raising money as a financial manager, you will focus on investing money. Let's label this function as invest funds in the circular function of finance. The investment function involves leasing, buying a building, acquiring kitchen equipment, purchasing furniture, supplies, and other assets for the business. Once the assets are placed in the business, as a manager, your focus shifts towards generating profits by managing costs and expenses. Let's label this function as generating profits on the circular function of finance. Let's assume that you have generated $50,000 in profits. At this point, you will determine whether to reinvest all the profits or share part of the profits with the shareholders. You decided to share $10,000 in dividends to shareholders as a token of appreciation and share the success of the business and reinvest $40,000 in the restaurant. The $40,000 reinvestment in the business is referred to as the retained earnings on the balance sheet of the company. Let's label this as reinvest funds on the circular function of finance. The restaurant startup was a success and the people are always waiting in line during the lunch and dinner. One of the regular customers, who is a university professor, advised you that if there is no growth in the business will go bankrupt. Furthermore, he explained to you that the people standing in the line is like an opportunity knocking on the door, and to think of growth and expansion. You realized the growth opportunity and decided to expand the seating capacity of the restaurant from 60 to 80 people. To expand the capacity, you need $240,000. That include kitchen, building, furniture, working capital, etc. You have $40,000 retained from the profits and you are able to borrow $200,000 from the bank. As a manager, after you raise money from outside, you will invest, generate profits, share part of the profits among the shareholders, reinvest the rest of the profits. You will go through this circle again and again. The circular function of finance will stop only if the company goes bankrupt. As a manager, it is important to remember that circular function of finance is the key to keeping the business out of bankruptcy. Thank you.